Hey everybody, welcome to another video. Today we're going to be taking a look at an income statement. So the income statement is one of several types of financial statements that companies will prepare for investors. And what the income statement shows specifically is the company's revenues and their expenses and the income that they generate after those expenses are subtracted from the revenue. And here's a real example of what an income statement looks like. So this is Coca-Cola's most recently reported income statement, and I'd like to just go over a couple things before we get into some of these lines here. So the first thing you'll notice is that this thing has a title at the top, and you kind of want to pay attention to some of the details up here before you start going into this thing. You'll see the title of this income statement is the Coca-Cola Company and Subsidiaries Consolidated Statements of Income. So what exactly does that even mean? Essentially, what this is an income statement that has been consolidated to include the Coca-Cola Company as well as all of their subsidiaries that they have control of. So this isn't really anything too complicated. Just imagine, say, Google, for example, and they own YouTube or Android, for example. So it would include those subsidiary companies that are under the parent company of Google. So the same thing could apply here for Coca-Cola. This is Coca-Cola and the subsidiaries that they have control of, that they own. And all of those financial numbers have been consolidated here onto one statement of income. Now the next thing right under that is in parentheses here, it says in millions except per share data. And what that means is that all of the numbers on this entire statement are going to be in millions, except for the per share data. So if you'll see further down here, such as the net income per share or the diluted net income per share, these numbers are not in millions. These are the actual numbers there. So this is actually 72 cents per share. But everything else above that here, such as the cost of goods sold or the operating revenues, these numbers are all in millions. So it just says 10,980 there, but that's in millions, so that would be $10.9 billion essentially. Now I'd like to mention that not every income statement will display the numbers in millions. That's just because Coca-Cola is such a massive company. These numbers are in the billions, so in order to shorten things up, they've just kept all of these numbers in the millions. Sometimes it'll be in the thousands, sometimes there might not even be anything at all. It might literally be just $10,980. So you always want to keep an eye on that to make sure you know the scale of the numbers that you're dealing with here. Now the final thing you want to pay attention to is the time period the income statement is for. In this case, this is in Coca-Cola's most recent quarterly report. And, for companies, a quarter is basically 3 months long. So that's why you see that this income statement is for the 3 months ended March 31st, 2023. So essentially, this began at the beginning of January, and it goes through the end of March. So this is all of the operating revenues that Coca-Cola brought in during that period of 3 months. Now, moving on to the actual giant block of text here itself. What in the world is this thing? Okay, so you first of all start with the revenue. This is the top line. And this is one of the most important lines on this thing, because this is essentially what this company is bringing in from its operations, essentially. This is not money that they're bringing in from investors or from taking on debt. This is money that they're generating from selling the products that they produce or the services that they offer. And then right below that is the cost of goods sold. And what that is it's pretty much the costs associated with the actual process of delivering that product to customers, essentially. So that could be the shipping costs, it could be the cost of the can, it could be the cost of bottles, the cost of the labor involved in bottling those and distributing those, the cost of the soda itself, the actual cost of the raw materials. So that's essentially what's included in this whole cost of goods sold line. Now the next line down is the gross profit, and you'll notice that this is the cost of goods sold subtracted from these operating revenues. So this is basically showing you where you are so far. Essentially, this whole income statement is basically like a giant filter, basically. So you're starting off with those revenues there at the top, and then you're subtracting out these costs. So you'll see the selling, general, and administrative expenses here, and this is essentially costs or expenses that the company has incurred that aren't related to the actual product itself. If it's somebody who is designing an advertising campaign or preparing these financial statements that we're looking at right here, these would be included in this line right here. Then there's the other operating charges, and this is kind of just an other category. And you'll notice that this isn't really as large as any of these other things. This is kind of some miscellaneous expenses that they've incurred here. The next line down is the operating income, and you'll notice that this is another sort of bookmark of kind of where you're at this point in the income statement. You'll see that it's basically these two lines of expenses subtracted from that gross profit. And this is what you're left with at the end of it all so far. So we're continuing down the filter, and we've got $3.367 billion of income at this point in the income statement. The next line down is interest income. So just like how you might have money in a savings account or in a certificate of deposit or in bonds, and you might earn interest on that money that you've got in there, that income is basically what this line is right here. So Coca-Cola has a savings account at Chase Bank, for example, and this is the interest that they earned these 3 months. Obviously, you know, that's a simplified explanation of this. This could be government bonds that they're holding or whatever. This could be anything that they're earning interest from. Then there would be interest expense, and this would be interest on debt. Typically is a very common thing you would be paying interest on. So let's say you've got a credit card or a mortgage or something, and you're paying interest on that. That's essentially what is going on right here for Coca-Cola. This is debt that they've taken out probably to fund new capital expenditures probably for the company. And here it is, they're paying that interest for that debt that they've taken out. Next, you'll see equity income or loss. And this is a bit different from the lines above it. This line, it can go either way. It could be income or it could be a loss. And the way they would show that is to either have it just displayed as a number like this, if it was income, and if it was a loss, they'll put it in parentheses. And you'll see that right here with this $105 million right there. This is a $105 million loss on other income. So that's what these parentheses mean. It's basically a negative number. And what equity income is basically money that Coca-Cola has earned from dividends in other companies, essentially. So quite similarly to if you purchased Coca-Cola stock and Coca-Cola paid you a dividend, that would be income for you, and the same applies here for Coca-Cola. They perhaps have investments in other companies or some funds or whatever, and there are dividends paid to Coca-Cola for that. It might even be the subsidiaries that they own. They own shares of their subsidiaries, and those companies are paying dividends to them. So that's what this equity income or loss line means right there. Then you'll see other income or loss, and the same applies here. This could be income or it could be a loss. Of course, right here, this is income, but for the previous year, that was a loss. And this, again, this is just an other category, basically. Things that don't fall into these other categories, but, you know, aren't worth breaking down any further, really. They're just included right here in this other income or loss category. Now, the next line down is income before income taxes. And this is another step along our journey down the income statement. This is basically the operating income plus the interest income, subtracting the interest expense, adding the equity income, since this was income, it wasn't a loss. It could have been, but this was income for this quarter. Then there was the other income. And all of those combined give us income before income taxes. And then here's the taxes right there. Income taxes, $940 million. And then after subtracting those income taxes, you finally get the consolidated net income of $3.113 billion. And this is what Coca-Cola takes away at the end of the day. After all of these things are said and done, accounted for basically, this is their profit at the end of the day. And you'll hear people refer to this as the bottom line since it's at the bottom of the income statement. It's after all of these other things. But there's a problem. This isn't the bottom line, of course. There's more things below it. Now, the next line here below the bottom line says less net income or loss attributable to non-controlling interests. And that's only $6 million. So typically this is a fairly inconsequential line. It's not something you typically need to pay a ton of attention to. It's usually not that much. You can see that it was greater in the past year, a year ago for Coca-Cola. But essentially what this is it's net income that is owed or, it's attributable to shareholders of subsidiaries of Coca-Cola that Coca-Cola doesn't entirely own in full. So let's say Coca-Cola owns a subsidiary. They own 60% of it. They have the controlling interest, which means it would be reported on this income statement. Since this is a consolidated statement of income, it includes those subsidiaries that Coca-Cola has control of. But 40% of that subsidiary is owned by other shareholders that aren't related to Coca-Cola. So, basically this is the income or the loss, if Coca-Cola had a loss, that is attributable to those 40% of shareholders of that subsidiary. And this would apply to any subsidiaries that Coca-Cola doesn't have full control of. So essentially, that's what this line is. It's very difficult to explain in a very clear and concise way like this, I know, but that's basically what this is if you were wondering about that. So then, after subtracting that $6 million attributable to the non-controlling interests, you're left with the actual net income that's attributable to the shareholders of Coca-Cola. And that is $3.107 billion there for the past 3 months ended March 31st, 2023. The next line down here is the basic net income per share, and that's literally just this number divided by the number of shares of the company that are available for trade. Then the next one is the diluted net income per share, and this is basically the same deal except it's divided by the number of outstanding shares. And then finally, at the end of this income statement, we can see the number of shares outstanding. Basically, this is the number of shares that exist of Coca-Cola stock. And at the time of this income statement coming out, there were 4.326 million shares. You want to kind of be careful here because we weren't using millions for these two numbers, but then down here we're back to using those millions. It's only for the per share data, so it was only for these two lines right here. So we're back to using millions, and you can see that there were 4.326 million average shares outstanding for Coca-Cola at the time of this report coming out. So that's pretty much it for an income statement. It really is basically just like a giant filter. You're starting off with this revenue, and then you're you're subtracting these expenses along the way as you go further down that income statement. And eventually you end up with that net income or the profit of the company. That's what the company ends up making at the end of the day, and that ends up going onto the balance sheet. A balance sheet shows a company's assets, its liabilities, and its equity, and it essentially lets you see the health of a company at that current point in time. I hope everybody enjoyed watching, and I'll see all of you in the next video.